Well, good evening, ladies and gentlemen. Well, a very diverse range of companies presenting tonight. I was quite surprised. So we've had the high tech, and now we're back to mining, which is one of the oldest mining industries in existence. We do what we say on the can. We're Scottish. We're mining gold, and we're producing resources. So it doesn't get much simpler than that. And this is our disclaimer. Any of you that know about the resource industry know that we have to declare our resources to strict standards. And this basically tells you all the risks and everything else that you should be aware of if you're investing in the resource sector. So having read that and memorized it, we are an ASX company. We're Australian incorporated back in 2007. We were listed on the ASX and then subsequently listed on AIM. So we have a dual listing. Effectively, all our management is here in UK based. It's a bit of it's a historical legacy, the Australian leg, but it's one of those things that's there. And at times the Australian market has been very supportive from a fundraising perspective. We're relatively small, as you can see. Share price of I think it was yesterday, it was 0.6. Total market cap of 7.6. We've got about £500,000 in the bank and no third-party debt. Although 3 of our major shareholders have put in convertible notes. Just who the team is, our chairman is Mr. Nat LaRue. He's very eminent in the mining and metals industry. He's on the board of the London Metals Exchange, and he sends his apologies tonight. He would love to be in here, but he had prior commitments with them. Myself, a mining engineer. Chris Sangster, our technical director, is also here tonight. Also a mining engineer. David Swan, very experienced CFO in the mining industry. And Nairi Hill, our project geologist. So we are all very technically focused, and our objective is to bring this mine, the project that we've got, into existence and start producing gold. So what are our focuses? As I said, we have the Canarnish Gold and Silver project. Some of you may have heard of it. I'll show you where it is just in a minute. We have reserves of 200,000 ounces. This is relatively small by gold mining standards. A lot of mines consider sort of 1 million ounces to be the minimum. However, we are very high grade, and so quality counts. And when you're in an area like as we are, in a national park in Scotland, you have to make sure you can mine effectively and at a low cost. And to do that, you need the grade. Grade is king. So we are blessed with what is probably upper quartile of grades. Average production about 23,000 ounces a year. Our secondary focus is really our Grampian exploration project, and I'll show that again in a minute. That's a big block of land we have here in Scotland, and this will generate the pipeline for future Canarnish-style projects. Canarnish itself, we own 100% of it. It's fully permitted. As I said, it is in a national park, the Loch Lomond and Trossachs National Park. As you can imagine, it's very stringent. It took many years to get that permitting through. But we've done so, and we have a 24/6 operation now permitted and ready to go. Reserves and resources I've mentioned, and more importantly, we have our bankable feasibility study. So this is the document which basically sets out all the estimates, sets out all the assumptions, and is the sort of thing which financiers look at and say, deciding whether to invest or not. In terms of where we are, sort of many of you in this room should know this. We've got Glasgow, you've got Glasgow Airport, we're well served. You've got the A82 coming up Loch Lomond, come up to Tyndrum. Some of you may know the Green Welly. Just across the hill from the Green Welly is the Canarnish farm, and the mine is located on the Canarnish farm. So it's about sort of 20 minutes on a dirt track from Tyndrum itself. Just by way of it, on the same slide, this blue blocks here represent the land holding we have in Scotland. These are areas where we have agreements with the Crown. The Crown estate owns all the gold and silver rights, with a couple of exceptions in the UK. And we have option agreements with them to be able to mine and ultimately develop and pay a royalty for gold and silver within those areas. In terms of this is looking up the valley of the Canarnish farm. And you can see there's some farm buildings, barns in the foreground here. There's where the word mine is a portal here. The portal is an entrance to a tunnel which basically goes straight in the side of this hill. The black line going over the top of the hill represents the slice. The vein is a broad band between about 2 and 5 meters thick of quartzite, splits the whole hill straight down, pretty well straight down the middle, like the ham in a sandwich. And this tunnel basically goes from about the ear of mine, and it goes in and it goes along that ham straight through the middle of the sandwich. The significance, this little white area you can see here, when they developed the tunnel, this is the material that came out and was dumped on the side of the hill. Now, because they went in along the ham of the sandwich, this tunnel, this material here contains gold. So that's a stockpile of gold which we're going to be utilizing and turning into account. But the ultimate mine will have a dark green building here, probably far less prominent than these farm buildings. And then there'll be a tailings dam, which is basically the rock where you've extracted the gold, will be stored, and that'll be contoured and we'll be married in with the local topography there. So it'll be very, very low visual impact. Just also, by the way, this is the Canarnish farmhouse where I'm staying at the moment. So. This is the portal, so this is the entrance to the tunnel. It would say it was developed as an exploration tunnel, so it was developed on the actual gold-bearing rock itself. For the actual development of the mine, this will be utilised. It will be enlarged slightly. So instead of this, what was originally tracked equipment, we'll be using trackless. So it's like very small little dump trucks, small front-end loaders which go in and load and pull the material out. This is a section through the ham. So if you've taken off your top slice of bread and what you see in the middle, basically the different colours denote the different classifications of resource. So you've got measured, indicated and inferred. The measured is the most confident, and obviously where this tunnel comes in along the ore body itself, you've got the most data, you've got the most confidence, and that gives you your measured category. There, when you've got the density of drill holes, we get to your measured category, sorry, your measured indicated category. And then beyond that, we've got inferred, which is where we've got indications that there's gold, but we don't have enough data to really upgrade it any further. But if you understand these ore bodies, they're epithermal, which means they are effectively hot fluids which came from the center of the earth, came from the core. So they've come up and they've cooled, and and gold and other minerals have precipitated out. So essentially, there's no reason why these things stop here, other than we don't have any data below them. So we've got plunging chutes where we can see where we've got high-grade zones. We would fully expect that these would go down this way, and it's just simply a case of the time and the money to drill these out and add additional resources. If you look at the mine plan itself, how do you actually mine this sandwich? What we've got is, this is the entrance to the tunnel you saw, the portal. It'll be enlarged, and it basically goes in along the middle of the ore body. You've got it's a very small, compact mine. We're talking about 160 meters vertically there, and about 80 meters further down. You then, in the middle, you come up with what is like a multi-story car park. You've got a spiral ramp goes up. You then come out on the various levels, which are 15 meters apart. And then between those, we drill down from one level to the other, blast the ore, the rock falls down, gets shoved across to the ore passes, falls down to the main level, and then comes out in a truck to the processing plant just sitting outside the portal. So a very simple, very conventional type of mining method, very low risk. In terms of what the model itself says, I think that the resources we've talked about, 175,000 ounces. That's metal production. We had originally 200,000 ounces, but obviously you don't recover everything that's going to be, everything that's in the ore. There's a certain amount which was always left in the tails. We've got a mine life of 8 years. That is on that current production, so that's without going deeper and finding more ore further down or finding more ore further to the west. We've got an average processing rate of 72,000 tonnes per annum. Now, when you're mining, you know, there's you can expand that if you've got faces. It's all about how many ends, how many points of attack you've got on an ore body. Because we have one single ore body, which basically slices straight through the hill, we have a limited number of points of attack. So if we find more, it's probably, the rate will probably be similar, simply because of that geometry. If we were to find parallel zones, you could effectively double or treble or whatever your production rate. But because we've got the 1, we will probably stick with the 72,000 ounces. But if we find more than that 8 years, we'll probably go up to 12, 14 or whatever. As well as the gold, we do have quite a bit of silver. But in terms of value, it's about 7%. So we've got 11.8 grams a tonne of what we call gold equivalent. So that's the gold plus the silver at the silver to gold price ratio. 93% recovery, 23,000 ounces, as we talked about, per year. I think the key here is that because we've done a lot of work on the geology, we understand where these higher grade zones are. So it's not one uniform spreading of jam. There's thick areas and there's thin areas. And because we know where the thicker, better areas are, we can target those in the early years. So by coming up with higher production of ounces, because we can mine higher grade in the early years, even at the same tonnage throughput through the plant, obviously has significant financial impacts. It means we can get the cash flow back that much far better, far more profitable in those early years. Coming on to just the dynamics, the cost dynamics, overall capital 24 million. That's life of mine, so that covers everything. It's like when you build your car and then you have to have every car serviced and you have to replace it every so often. That's all wrapped up in that 24. The 18.5 million is what we need to actually, before you get to start generating in cash, become cash positive. And the life of mine average of £327, but that's $552. That is very low by international standards for an operating cost, which makes the whole project very robust. Just coming on to the actual project returns, EBITDA of 76 million, pre-tax cash, which basically effectively the EBITDA minus the capital, and then discounted at various rates to give you your MPVs. Importantly, this study was done at $1,100 gold price, and people in the gold industry tend to think in terms of the dollar gold price. But when we did the assumptions, we were also assuming an exchange rate of 1.6. So exchange rate does have a big influence. In other words, when these numbers were calculated on the base case, we were then using a pound gold price of 687 pounds per ounce. And if you look at what's actually happened to the pound price of gold, in dollar terms, it's probably gone up from about 1,100 that we had in the base case. We're sitting at about 1220 now. In terms of pound terms, we're now sitting up at about over 850. I think it peaked at about 890 a day or two ago. So that is because not only has the dollar price of gold gone up, but the dollar-pound exchange rate has come down. So it's come down from about 1.6 to 1.4. So this is, by investing in a gold mine in Scotland, in the UK, you're getting the benefits of UK security, but you're also getting a hedge against a falling pound. So if anyone's worried about Brexit or whatever, here's your answer. And the impact of that on the numbers, these are the numbers I just talked about, the 67 million EBITDA at our base case of 1,100 or 687. If you take the current gold price, we're sitting up here at just about the 850 mark. That's about, so we've gone from 67 to 100 million. And then you've got to consider the fact that we're going to be producing a lot of Scottish gold. And we've sort of made a bit of a song and dance, and the papers have picked up on this morning. But we do believe that there'll be a premium for Scottish gold. And we've been talking to some of the jewellers already. They'll be very happy to take our supply for a percentage over and above the spot, because it's eminently marketable. They can do a jewellery range. You can get wedding rings made of genuine Scottish silver. We'll be talking to the assay office tomorrow about how we get this hallmarked as in Edinburgh as Scottish gold and silver. And I think so. What you can say is, well, maybe you can add. We don't yet know what the market will be or what the premium will be, but you can take your guess and you can add your 10, 20%, whatever you want to add on to those numbers here, and that's going to move you up into these numbers. So, for example, a company with a current market cap of 7.5 million, which we are, we've got a project which throws out sort of 75 million of cash. So it's not a shabby project. That's the basic fundamental project. Just like to quickly turn to the what we call the bulk processing trial, and this is really taking some of that ore I talked about that was sitting on the side of the hill. You can see in the first photo, and doing some trial processing on that. It's going to be very small scale. We're taking about 2,500 tonnes of the 7,000 tonnes that are there. And the reason why we're doing it is because we want to, A, be able to produce a small amount of gold so we can go to jewelers and say, well, look, if we've got this, what will you actually pay for it? And find out what we can really achieve. And also, the results of doing this trial will enable us to have another re-look at the way we're developing the project. And unfortunately, for resource, in the resource sector, things are quite tight at the moment in terms of finance. And the banks are sort of thinking about resources all in one basket, and obviously oil's not been doing very well. So it is a tight market, and we all have to put our best foot forward. So by demonstrating that we can do what we're doing and we can produce some gold, it will go a long way to overcoming that. And secondly, if by doing this small trial we can say, well, actually, this is now a mechanism whereby instead of having to raise all the money and then build the project in one hit, can we not do what we're doing here, but just on a slightly bigger scale and sort of grow ourselves organically and pay off some of that capital in a phased approach? So, as I said, the two options are, one, we raise all the money and we just build the project. The second are that we do some scaling up of our trial process and we pay off a lot of our capex doing it that way. And the trial actually assists us with both, because it assists us with giving credibility to the conventional finances as well. So the phased approach we talked about is basically the trial. Then we would do a phase 1, which would be a scale up of the trial, and then phase 2, which would then be stepping up to the full production as we had it envisaged in the original feasibility study. And the actual plant itself, it's brand new, out of the box. It's not rocket science. It's a little hopper, goes into a little crusher, crushes it down, then goes into a centrifuge, which spins it and gets the very fine gold grains out. It then goes into a spiral, and spiral's just like a big water slide. It whizzes down the spiral, the heavy stuff goes to the outside. And so that separates that out. It's all no chemicals, no high-tech stuff, but you end up with two products. The first is the very fine gold, the pure gold, which you can smelt directly. The second product is the gold which is associated with pyrite minerals, which would then need further treatment off-site. Essentially, yes, just say that we have, we have placed the orders already. It's a relatively modest capex of £140,000, so small money in a bigger scheme of things, but at a very critical time for us, and it'll pay dividends. Just a layout of the plant. I say this is sitting in, this is a drawing just showing it sitting in one of the existing sheds. So there's no big new infrastructure or anything else going up. And this is a typical of a similar plant, which is built in South Africa. I've been to the factory and spoken to the guys there. What they do is they, from the specs, they put it all together, they manufacture it, they assemble it, they test it. If you want to, we may well send 1 or 2 of our personnel out there to be sort of trained on it, understand how it works in the factory. It then gets broken down into subcomponents, put into a 40-foot container, shipped over to Grangemouth. They then come over when it arrives with their technicians, take it out of the container, put it all together inside the shed, get it working, train the guys, hey presto, you're away. So relatively simple. That's the plant. Nextly, just to come on briefly, we mentioned earlier about the whole belt here. You see, we have the preeminent position. There's nobody else. We've got about 4,100 square kilometres of ground covered with options for the Crown Estate. Don't think anybody else has that size of package. We have the Canarnish, which we said was relatively small by mining standards. You've got Coron here from the Dalradian. They've got a multi-million ounce deposit, some 3.5 million ounces. You've got Omar, which is a bit in between, that's about 500,000 ounces. So this whole belt, which runs from Scandinavia across to Newfoundland, is highly prospective. It is elephant country. And there's no reason why there can't be other multi-million ounce deposits over here. Our focus today, though, or up to date, has been doing grassroots survey and data collection over this whole area to try and prioritise it. Because one of the problems we have is that there's gold everywhere. You can almost go to any stream and pan and find something. So the difficulty is differentiating where there's real potential and where there's just smoke. So what we've done is we've got a multiple layer approach. We've got data from stream seds, rock chip samples. We've mapped the geology. We've done some very sophisticated work on the types of structures, because when the Earth shatters, it shatters in certain patterns, and some elements of patterns are more likely to hold mineralization than others. So we've done a lot of that type work with that prospectivity, and then we've all done a sort of weighted average and loaded all those together and come up with a prospectivity map. And this is a very small area around Canarnish. Canarnish is sitting down here, and then we've got about, I think it's 9 in total deposits around, or targets around here, and outside the national park. Interestingly, that's the boundary of the national park, which runs around Canarnish. Outside the national park, which potentially could be future Canarnishes or bigger. And even if you look at just looking at the thing, you'd say, well, actually, some of these actually look even more attractive than Canarnish does. Obviously, they're prospects, they're targets. They've got to be drilled, they've got to be tested to find out what they are. But this is where we've got the most data. The rest of the area, is still largely untested. So, to sum up. Canarnish as a gold project, it's a high grade, low cost, low risk, near term. As I say, hopefully from the trial we'll be producing some gold mid-year, maybe May, maybe June, depending on our planning application. The bulk processing trial, I think, will give us a good handle on what sort of premium we can realistically expect. Means that we can get a feel for, in the premium, but what the likely demand is going to be. But having said that, demand is also subject to actually supply. So if we can get out there and we can market, we can create more demand. The bulk processing trial is also going to give us this second way of looking at this whole project. And in fact, instead of just looking at having to try and get the whole thing off the ground from 0 to 100 miles an hour, can we do it in a couple of steps and actually use the baby steps to pay for the subsequent steps? I think the early gold production reinforces the attractiveness of Canarnish. There's a lot of explorers out there, obviously the closer you are to production, the higher you're valued. And as a company, the Grampian Project has phenomenal potential to actually generate a pipeline. So once we've got Canarnish up and running, with the technologies we've now got through the BPT as well, we can look at how we can develop mines at almost any scale. Whereas most people say, it's got to be 100,000 ounces a year and a million ounce deposit before we even think about it. We're going to be at a niche where we can say, well, actually, we can take something much smaller than that. We can use this technology, and we can get in there and turn a profit. And with that, thank you very much. No idea. I'm going to race through it.
Spot on. Pretty good, actually. Any questions, gentlemen down here at the front?
What are the threats to your business? In particular, what about planning permission? Because that can take years and years.
Well, planning permission is granted for the full project. So if we were to have the finance and we wanted, instead of going through a phased approach, we wanted to build our project in one hit, that is all fully permitted. It's subject to certain conditions, as all permits are. We've got to build a car park, and we've got to widen the road, and all those sorts of things which would be done in the normal course of business. So that's not an issue. For the trial, we need a permit for the trial, but the trial is far less onerous than the full project, which is already permitted. But it does still need a little permit on its own merit. So we are had very constructive discussions with the Loch Lomond and Trossachs National Park. They're seeing what they can do. They're gathering information at the moment. The formal application will go in, and they'll put it through. But we don't see there's no real reason why that should be very onerous at all. Because, essentially it's inside an existing shed, and it's in an area where you've already got a permit to do a big mine. Why would you stop someone doing something in a shed on their own property?
What about the other areas you're potentially looking at?
The other areas, well, on that graph, you'll see probably, if I can just quickly, if you look here, this is Canarnish, and this is a 2.5 kilometre circle around Canarnish, and the green is the park boundary. So most of these are actually outside the park. And so, it took us a long time to go through the park. We know that there's no, it's a matter of record. But we've got a very good relationship with the park now. We've been through an amendment which went through very quickly back in February 2015, which was essentially a new license, but it was to enable us to do our 24/6 processing. So I think to when we tackle these, which are outside the park, well, those lessons will stand us in good stead, and it won't take us anything like as long as it has done in the past.
Next question, one at the back.
The Canarnish mine, is that where there was mining in the 1980s?
Correct. It was the late 80s when they developed the ited.
That from another company.
So it was Enix was they're actually Irish explorers. So they followed that they followed their noses across from Ireland across to Scotland, and were exploring over here. They first discovered Canarnish, and they developed the ited into it.
I had a friend that came from Vancouver. Fortunately, he's passed away now. He was a geologist, and he stayed in the cottage beside that.
Okay,
all right. He did leave. He thought it was you had to crush a lot of rock to make some money.
Yeah. Well, actually, as I say, because of the grade, you have to crush a lot less rock with our deposit than you do on most. That's for sure.
Gentleman just here.
Would you consider? Oh, sorry. Would you consider moving your primary listing back to the UK and put the secondary one in Australia?
Well, we would consider anything that saves us money. It depends how useful it is.
The reason I'm asking is because the ASX listing allows you to issue 15% of your shares a year without shareholder approval, whereas the UK listing, you have to get shareholder approval before you increase your share capital, which is why all the ASX resource stocks tend to issue shares like confetti, and guys like us get diluted out of it.
Yeah. For us, that hasn't really been an issue. The issue for us is more the cost of maintaining that ASX listing. Probably about 15% of our shareholder base are true Australians living in Australia, and we probably do about 80–90% of our trading takes place on AIM rather than on ASX. So unless there's going forward at some point in time, we raise more money in Australia and the Australians become more active, then the questions would be asked as to why we're keeping it. Obviously, we would have to review that.
Okay. Richard, Instan very kindly brought a pen for everybody. Have you brought some gold for everybody? A sample for everybody? It's only just down the road.
That's next time.
Next time. When you start
when we started the program. Yes.
Right. So next time, folks. One more question. We're a bit over. One more question. Gentleman down here at the front.
We have a current payback time of 19 months. Is that correct?
Correct.
And at today's current gold price, we'll probably be bringing in an extra 4.5 million a year. So will that bring it down to what, 12, 13, 14 months?
It won't. On the full project, the payback was 19 months. Essentially, that's because for about 12, 13 months of that, you're developing and not producing any gold at all. Your payback comes after when you start producing gold, and that generates enough revenue to offset all the capital you're spending to get to break even. So even though the gold price goes up, it won't necessarily bring the payback down proportionally, but what it means is that you'll very quickly be into cash positive, and you'll be paying off that loan or whatever finance you've done, well within a couple of years of commercial production.
Thank you very much indeed. Thanks, Richard.
Thank you.
Thank you.